Have you ever wondered what it's like to run a company on a Bitcoin standard? In this episode of Bitcoin for Millennials, I'm joined by Chase Palmieri. He's the CEO of Acropolis, a pioneering company that makes Bitcoin Treasury adoption accessible for businesses worldwide.
We bring companies through this repeatable process of onboarding them into Bitcoin in the right way.
Chase's journey from launching a Michelin-rewarded Italian restaurant to leading a global Bitcoin treasury platform is a fascinating story of entrepreneurship, innovation, and family.
Maybe a year ago, I would have said you're early. Now I'd say like you're just on time. I think a year from now, you're starting to be too late.
We'll explore how Bitcoin influences business decisions and the personal lives of those who adopt it. I really enjoyed this conversation with Chase. If you find it valuable too, please like this video on YouTube and subscribe here, or follow me on any of your favorite podcasting platforms. That will help me to reach more people and spread the message on Bitcoin even further. All right, now let's dive in. All right, Chase Palmieri, welcome to Bitcoin for Millennials.
Thank you. Great to be here.
Yeah, man, happy to chat. I think it's super interesting what you're building with Acropolis. We're definitely going to talk about that. But I just want to kick it off with your personal Bitcoin journey to discovering and embracing Bitcoin. How did that evolve over time for you?
So I kind of found Bitcoin in my last year at university. So I'd been deep into finance, economics, accounting classes, and I was, the supply and demand curve, and it was just drilled into my brain. And so I can't remember where I first heard about Bitcoin, but luckily for me, the meme of what I heard about Bitcoin first was there will only ever be 21 million. And so for me, it was a simple exercise of, okay, are we early to Bitcoin or late to Bitcoin? Well, we were obviously early when I found it in 2015, because basically everybody I talked to either had never heard of it or knew nothing about it. And so then for me, it really became an exercise in trying to understand whether the hard cap of 21 million could be defended over time. Was that real, or was that somehow going to fall apart? From an economics and kind of value investor basis, it made sense to me right away, but then it sent me down kind of all of the various technical rabbit holes, which was new territory for me. So I really had to kind of learn a lot about blockchain, difficulty adjustment, all of these various technologies that kind of formed together to create Bitcoin. I had to get a baseline understanding of that just to prove or disprove the thesis of the simple supply and demand curve. Once I felt comfortable that, this is a defensible protocol, the hard cap will remain a hard cap. There's no incentive for the Bitcoin communities to change the hard cap. It became pretty obvious to me that this is going to become probably the most valuable thing that humanity's ever seen. So that's kind of the fast version of it. No, I've never sold Bitcoin, never shitcoined. For me, it was pretty straight path down the 21 million rabbit hole.
I think it's interesting because you say, your background education in finance also, right? You understanding that supply side, I think, is actually pretty special for people that have a finance background, right? Like, it seems that this fairly basic notion of, if the demand for Bitcoin increases, there's no way to make more of them, right? As Jack Mahler says, gold is stuck in the ground and Bitcoin is stuck in time, right? So you have to wait. Yeah, me too. So you have to wait before new Bitcoin can, enter the market. As someone who doesn't have a finance or economics background, that sounds clear as day. That's very logical, rational, very, very, very clear cut. But it seems that people with a finance background actually have a hard time getting this. Does it sound too good to be true or something? What is your take on that? Sometimes that's my take. It sounds too good to be true. And in fiat, the zero-sum fiat game, it's kind of if I win, you lose. And so, people are having difficulties in seeing that simplicity in a sense.
I think what happened for me is I had the right amount of finance background. I hadn't yet entered the corporate world. I hadn't yet made money through the various kind of fiat mechanisms and kind of instilled in myself, this is how you build wealth in the fiat world. So I knew just enough to, let Bitcoin click for me, but not enough to have been tainted, poisoned, or have the negative incentives that comes with a long career in fiat. So I think that's probably the answer to why folks with really impressive banking, finance, investment management backgrounds are slow to Bitcoin, is because they've just found other reliable ways to make money. They maybe don't even need it because they've already made money. But most of the time, it's like, they know too much. They know the inner workings of fiat, and it's like a fish in water. It's just very hard for them to see a system that is outside of that.
Yeah. Yeah, that's probably it. Okay, nice. So you were a bit lucky with the timing coming across, but you also ran. I saw a Michelin awarded restaurant. Was that like a family restaurant?
Yeah. My dad and I opened a restaurant 19 years ago. I was
Okay.
16 years old at the time, but my dad is a serial entrepreneur. So is my mom. But my dad and I opened this restaurant together 19 years ago. It's a Michelin Bib Gourmand award winner, like 12 straight years, something like that. So we have had a really good run with that restaurant in Northern California. It's a high-end Italian restaurant. And I think what you're going to get at is that we actually adopted a Bitcoin Treasury for the restaurant back in 2018. So it did take me, I'll say from 2015 to 2016 was my like having to do my homework and orange pilling myself. And then from 2016 to 2018, it took 2 years to orange pill my father, who obviously I needed to kind of co-sign on the Bitcoin Treasury. But as of 2018, we've been taking all free cash flow, the entire corporate treasury, as much as we can outside of, a couple month cushion for reserves and putting that into Bitcoin. And so, now we're actually looking to sell the restaurant in the next year or so because the Bitcoin position is just so much more valuable. And we're looking at that Bitcoin position that gives us no headaches, no stress, no job, no labor, and it doesn't call us in the middle of the night with a leak. It doesn't, mean we have to come up with maintenance costs to fix an oven or a refrigerator or something like that. And so we're just looking at the operating business now, and it's like, let's get out of this. Like Bitcoin is so simple. It grows on its own, and operating businesses are really hard. And my dad's at the point where he wants to retire, and I'm running Acropolis and have been for a while. So, yeah, we're at the point where like, let's sell the restaurant, peel off the Bitcoin from the sale, and sail into the sunset.
Amazing. I think that is actually a really great example for when you adopt a Bitcoin standard, you actually create, I call that the time and space to really make conscious decisions, right? So just reflecting on, do I still want to run a restaurant with everything that comes with running a restaurant, right? And actually having Bitcoin as a treasury gives you, over time, of course, the optionality to reflect on that, right? And I think a lot of people are trapped in what they're doing, whether that's a certain business or a certain job that they that is either not working or they don't really enjoy, right? But because they have a fiat money standard for their life, they aren't able to like get out of that self-induced rat race or the rat race in general to get to that point. So I think that's an amazing example. I hope that works. And in that way, you actually also achieved your father being able to retire then.
Yeah, and we've been making personal investments just with the family business and family capital into Bitcoin, and a big chunk into MicroStrategy very early as well. So my dad can retire. It's really just about finding a buyer for that restaurant that he feels is going to hopefully maintain the quality, keep the staff, so there's a lot of folks that we want to make sure still have jobs and incomes for themselves going forward. And so it's really just about finding the right fit. But he's ready to spend more time with his granddaughter, spend more time not worrying about Yelp reviews.
Bitcoin custody is evolving, and Onramp is leading this change with multi-institution custody, eliminating single points of failure. Instead of relying on one institution, Onramp secures your Bitcoin in a cold storage multi-sig vault backed by 3 independent custodians, where no single party can move your funds alone, providing an unprecedented level of security. Your assets are protected by a 100 million Lloyd's of London insurance policy, with all transactions fully auditable on-chain and only executed at your direction. This means complete transparency and control over your assets at all times. Beyond custody, Onramp provides comprehensive Bitcoin services that include trading, lending, inheritance planning, and IRAs. You can view them as your private Bitcoin banking partner tailored to your wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, Onramp's approach helps you secure your generational wealth with unmatched security and peace of mind. You can sign up at onrampbitcoin.com and use code BRAM, that's BRAM, to receive $150 in Bitcoin after your first deposit. If you first want to learn more, you can also book a free consultation via their website to speak with one of their Bitcoin custody experts. Tell them you came through me, and they'll take extra good care of you.
Yeah. And so seeing the positive effect of having a Bitcoin strategy for the restaurant, how did you approach orange pilling the rest of the family or your close circle around, or how did that go with your father initially to get him in on that?
So my dad doesn't have a computer, is really bad at the internet in general. So I really had to focus the orange pilling with him on the economic side, and then kind of tell him, trust me, the tech checks out. He got there eventually. My mom only got there this year. I finally got her to being a Wholecoiner this year. But once she got it and she made some money on it, she's out there, bragging to her friends on the tennis court. Now she's into MSTR and Misty. And so she's getting down the rabbit hole herself now. But my wife and I have spent countless hours, much more than just the 10,000 hours it takes to become an expert at something. Since my wife and I got together in, I think it was like 2018, 2019, we basically just turned off Netflix and Hulu and all that and used our free time, our evenings, to learn about Bitcoin and make sure that we were positioning ourselves to maximally build a family empire, a lasting generational wealth for our family, given the urgency of this opportunity.
How would you describe that urgency for others?
Maybe a year ago, I would have said you're early. Now I'd say you're just on time. I think a year from now, you're starting to be too late. I really think people need to almost buy before they do the 10,000 hours at this point, and then just kind of catch up, because the education you can't rush, but the Bitcoin price is really starting to run away. I think we're going to figures that will scare some normies over the next 2 years. And it's definitely already too late for most people to try to become a Wholecoiner. I mean, I think you and I know, just inherently, if there's only 21 million coins and Strategy owns 600,000 of them, and other Bitcoin Treasury companies own a bunch of them, and then you have individual whales that own thousands of coins, there's just not going to be very many Wholecoiners in the world. I really think that being a Wholecoiner is going to be the most unique status symbol over the next few decades. And so if it's within reach for you, great. But I would also remind folks that you don't need to own a full Bitcoin, that whatever capital you can put into Bitcoin relative to your wealth is capital that you're going to be thankful you did put into Bitcoin, because it's going to outperform anything else and it's going to preserve your purchasing power. So we talk a lot about Wholecoiner status, and I think rightfully so, because it will be a very cool signal in the future. I do think there's going to be nightclubs and stuff where it's prove through your proof of reserves that you're a Wholecoiner to come in. I really do think that there's going to become something like that, where being a Wholecoiner is going to become a certain status symbol to show and prove to the Bitcoin community that you were early, that you saw it, that you were part of this future that's being built. But then again, even just $2 to $5 to $10 at a time can really be meaningful to somebody if that's all they have to DCA with.
Well, eventually, if you look at Bitcoin as a superior savings tool first, and a better money second, then I think the use case for saving in Bitcoin is very clear, right? It's saving the money that you cannot afford to lose. And I agree, even with small amounts, eventually you do have to consolidate the UTXOs and stuff. But we were just looking at, I showed you before we started, like this overview, right, of like how many addresses have a certain amount of Bitcoin. And I think just a quick glance, it's like a little over 1 million addresses have 1 Bitcoin or more. Well, let's assume 20% or 25% extra for people that have spread across wallets. Let's say it's between 1,250,000 and 1.5 million unique people that have more than one Bitcoin or more. There are 60 million millionaires in the world. So having 1 Bitcoin right now is more rare than being a millionaire today. And all these millionaires have the same problems as the people who are not millionaires and the people that have companies like you are working with. It's like, okay, how do I protect my wealth, right? And I think it's going to be really crazy in 10 years from now. Like the people that are millionaires and especially multimillionaires today, like they maybe think they are coasting. Sometimes I'm lurking in the the FIRE subreddit, the financially independent retire early, and there are people that are FIRE, but they're struggling, right? Because they're like, hey, I'm not coasting. Like I actually still have to do work to manage this. And whenever I say like study Bitcoin, I always get downvoted. So I think a lot of people are still ignoring Bitcoin to that degree. And so, how do you experience that? Talking to our generational peers, this is Bitcoin for Millennials. I have like 4 people in my close vicinity that are into Bitcoin, but a lot of them are not. Also not long-term friends that are thinking like, hey, what's this guy doing? Yeah, how's your experience with that?
Unfortunately, most of my friends are either totally uninterested in Bitcoin because they think it's dirty to talk about money or personal investment or wanting to build wealth. There is this kind of thing where some people think it's impolite to talk about money. And I have a lot of that with some of my friends. And then, unfortunately, with the other group of my friends, they're into crypto, but they think Bitcoin is like boomer tech. They're like, oh, Bitcoin's old, it's slow, it's this, it's that, it's too simple. They want to be on the cutting edge of feature sets and functionality and efficiency, but they're totally missing out on the fact that it's not a tech company. This is about money. Like this is lasting capital, and that those other tokens are trading on, they're trading out the decentralization or store of value aspects, like the longevity of the protocol. There's just so many flashing lights in this space when you do find it. And I think it's really hard for people to stay committed. I think another flashing light for people these days is Bitcoin Treasury companies. So I have folks in my life who don't own any Bitcoin, but are like, throwing money at whatever the new Bitcoin Treasury company is. And as somebody who owns a company with a Bitcoin Treasury and works with companies with Bitcoin Treasuries, I do think that there are really nice investments to be made in that space, but people are absolutely asleep at the wheel when it comes to Bitcoin. Even as somebody who I would say has some credibility to speak to Bitcoin in the space, with people in your everyday life, they really don't want to hear it. They just want to do their day job and then watch Netflix and zone out and rest their brain. and they don't like to be challenged. And Bitcoin is a challenge. It takes real intellectual curiosity to actually, travel down the rabbit hole, because it's not easy. It touches everything. Bitcoin touches everything, and it'll make you feel stupid for a while.
I think it's interesting, right, that people of our generation are not interested in money, because I don't know about your friends, but sometimes I think, like, how are people doing this? If Bitcoin didn't exist, but I knew all these things, or I saw all these things, I would have no clue how to manage my life or plan for a family or where to live, and stuff like that. Just the big decisions that we are at in our phase of our lives. So yeah, it's kind of sad also, but it's really hard. I mean, that's why we're talking here, but it's hard.
It would be very hard to be optimistic. I think I would generally be a pessimistic person if I hadn't found Bitcoin, because I know enough to know that the system is broken. But if you don't find the solution, if you don't do the extra lap to figure out Bitcoin, you just are sitting around feeling hopeless, pessimistic, depressed. Like you're never moving forward. You're always taking 2 steps back, because even if you get a 5% raise, if they printed 7% of the money supply that year, you're still moving backwards. And so that's kind of this escalator that we're on. And it's interesting you brought up kind of how Bitcoin can theoretically end, or at least end unnecessary wars. This is something where, when I only have like 10, 15 minutes with somebody at a dinner table or something, and I'm not going to really get them all the way there on Bitcoin, I'll throw out this. I'll say something like, I think Bitcoin is potentially how we end these forever wars. And they think, it's very hard for them to put 2 and 2 together. So then you just say something like, well, imagine if the US government had to tax its citizens to go to Afghanistan or Iraq. Would we have gone to war there? Like, do you think the population would have actually willingly paid a war tax to fund those forever wars? And most people are like, oh yeah, no, like that probably never would have found traction. I say, yeah, it's because they can print the money that they can keep these wars going on forever without having to ask you for permission. And Bitcoin takes the money printer out of their hands, whether they like it or not. And so we're not going to see wasteful wars. And I don't know, maybe there are certain wars that are necessary, maybe, but they'll have to do that on a hard money standard. And so it won't be things that drag on forever.
Yeah. Well, there have to be substantiated arguments as to why you would be spending the hardest money to ever exist, which is increasingly harder, or will be increasingly harder to get back, right? Because you have to really work for it. So if you are a country, you need real productivity, positively incentivized productivity, like real productivity, like not government jobs, right? But like real productivity. Building new goods and services and etc. in order to get that back, right? So you would have to have like a really good argument as to why you're spending that. And I think that's a nice bridge to the concept of Bitcoin as the hurdle rate, which I think when you're on Bitcoin Twitter, people think that is a stupid thing to say, or they don't like the Bitcoin Treasury stuff. But I think Bitcoin as a hurdle rate, and I wonder what you think, is okay. If Bitcoin is the best performing asset where I can store my capital in, any other thing I would do with that capital has to return more than what my understanding is of Bitcoin's CAGR every year. That, in my view, is the definition of the hurdle rate. So I have that. This is how my wealth grows. If I spend it on something else, it should return more than that, which actually incentivizes you to be either very diligent with your spending or with your investing, right? Whether you're building a company, or you want to wage a war, or you want to get a new job or move somewhere, or whatever. Yeah, how are you looking at that, and how are you using that for your business, and also advising the businesses that you talk to?
It's funny. So Acropolis was a studio build out of, or a venture build out of the Early Riders portfolio. So Early Riders is a Bitcoin denominated venture fund. So they raise Bitcoin from LPs, they deploy Bitcoin into companies, and they only make money if as the profit above the Bitcoin appreciation. So they only make money themselves when returning capital, after returning capital to the LPs. They only participate in the upside of anything above Bitcoin's own growth as the kind of opportunity cost or hurdle rate. So as the CEO that was brought on to run Acropolis, obviously that is my directive, right? So I have to treat the Bitcoin in the Treasury as our treasure chest. It's something where we all at Acropolis are Bitcoin maxis, and so we know if we're spending money on something, it better be worth it, because we could just as easily not spend the money, and we see that Bitcoin 10xing over the next few years. So, you can't let it force you to sit on your hands. But at the same time, in VC-backed startups, Silicon Valley type startups, where it's all about, grow fast, hit another milestone so you can raise money again, there's this real bias towards action, where I would say a Bitcoin standard company or a Bitcoin treasury company, they swing at the right pitches. You get more selective. You wait for that right pitch. But then when you swing, you're trying to swing hard because that pitch was worth it. So you swing hard. Before running Acropolis and treating a business fully on a Bitcoin standard, I was a big proponent and believer in the lean startup methodology. But with lean startup, where you're only spending what you have to, and then you let the market justify future spend. You don't build another feature until the customer asks for it. You don't hire another person until some other person has become a bottleneck, and you have to hire that other person to expand the kind of service that you can provide. This type of thing where you hold back as long as you can until, okay, this guy is overwhelmed with his workload, now we have to hire help. That kind of thing. With the lean startup methodology, though, the opportunity cost is not clear. When you're running a company on a Bitcoin standard, the opportunity cost is measurable. So when you're doing a lean startup, you're like, don't spend unless you have to. But there was no attaching a 35 to 50% CAGR to that decision. So now you can really quantify every decision you make in a year, in a quarter, and weigh it against Bitcoin's performance over that time. And it's really interesting. It creates massive efficiency. And I would say in general, startups benefit from forced limitations. It forces a company to get really creative, find ways to grow that aren't about just pouring money into advertising and marketing. So I love it. I was a kind of a proponent of it beforehand, obviously an early adopter of Bitcoin treasuries. But then with Acropolis, every single dollar that we hold in our treasury is held in Bitcoin. So we're all in on Bitcoin as the hurdle rate, and our unit of account, our treasury, all of that.
It's really nice you mentioned the lean startup. Actually, my bachelor's thesis was about the lean startup when it just came out, and I think I've worked for also almost 10 years with dozens of teams and entrepreneurs, and always was a very rigid proponent of lean startups. So I think you described it perfectly, right? It's really about what should I build and not about what can I build, right? So really try to find the evidence for why should I spend my time and energy on doing this thing, or trying to build that feature, or trying to enter XYZ market. But I love what you're saying, and see, I'm learning as I go. I think the monetary incentive is a positive enforcer of that mindset, right? Because I always saw it as a mindset like you either understand that or you don't, right? Because there are so many founders that raise like $1 million and from a VC, and then they're like, well, yeah, I raised $1 million. I mean, I'm going to spend it. I'm going to build the thing. I'm going to build the entire thing that's in my head. I'm going to build the entire thing that I pitched to this investor guy that gave me the $1 million, right? And then kind of like all that diligence goes out of the window, basically, because they have the money to spend it. Like, they're incentivized to spend the money, which if you are actually diligent, because your money is so hard that you're going to regret spending it on the wrong thing, that actually kicks that mindset into gear. So I think it's really interesting that you attach that to that, because I fully agree.
It's exactly what we see in the consumer economy, right? Like, we have a culture of consumerism because everybody's getting paid in debasing, devaluing fiat dollars. And so we have this culture of, go buy that vacation, go upgrade the TV or the car, go spend money at fancy dinners, go get the gold chains, because you're sitting on dollars. So you are literally incentivized to spend it, because whether people know it or not, subconsciously, they know that those dollars need to be spent faster to basically accrete the most value to themselves. But when you're holding it in Bitcoin, it flips it. It's the opposite. You're like, no, no, no. Everything I don't spend is going to go up over time.
If you want to self-custody your Bitcoin stack, I recommend the Blockstream Jade Plus. I've been using this premium Bitcoin-only hardware wallet for a few months now, and I love its design and ease of use. What makes it stand out is its open source hardware and software, and Blockstream's unique genuine check, which makes sure that your device is authentic. No backdoors or compromises. You can connect with the Jade Plus however you want: Bluetooth, USB-C, or you can go fully air-gapped with its built-in camera for cable-free QR transactions. The metal case feels solid and the color screen is easy to read, and it connects with your favorite Bitcoin apps like Blockstream Green, Sparrow, and Electrum. Get your Jade Plus today at store.blockstream.com and use code BRAM to get 10% of your entire order. Let's talk about something that not a lot of people think about before it's too late. Where are you storing your Bitcoin seed words? Are they truly secure? I found my solution with StampSeed. It's an elegant all-in-one titanium plate solution with no separate pieces to lose or manage. Your seed phrase gets permanently stamped into pure titanium that withstands fire, survives water, and lasts for generations. Unlike shallow etching methods, StampSeed's patented tools help you to deeply stamp every letter for permanent readability, protecting your financial legacy. When you order a titanium seed plate from StampSeed, you can also upload a custom design or your logo to customize the back of your plate to make it fully personalized. Paper seed phrases are a disaster waiting to happen. Secure your Bitcoin with StampSeed for decades to come. Visit stampseed.com and use code BRAM, that's BRAM, to get 15% off your order.
So this is like a really game-changing aspect. Obviously, we've seen it in people's personal lives. Bitcoiners are famous for their, lack of spending in order to hodl longer. But when you do that with a company, companies are sitting on bonds, money market funds, cash. Oftentimes, they are losing value too. And so you have this fiat mindset that has infiltrated business building as well, where they raise a funding round or they have cash in their corporate treasury and they feel like they've got to start a new product line. They've got to go acquire a business. They've got to hire up more staff. They do all these things. There's this bias towards action, because whether consciously or subconsciously, they know that they have to spend it. But when you just flip the unit of account into Bitcoin, you take those dollars and you put them into Bitcoin, it's incredible the level of self-discipline that, can be enforced on a business as well as an individual.
Yeah. So you were kind of primed, where you were lucky on time to get Bitcoin. You were primed to move into it with your entrepreneurial spirit. What inspired you to go all in? Was that just to building a Bitcoin company? Was that the opportunity came along? Could you share a bit about that? And then also, what are you building with Acropolis?
So for the past decade, I was building a technology company called Cred that I had started in 2016 and only exited out of about 6 months ago. And it was the Rotten Tomatoes for news. We were gathering kind of credibility scores based on audience trust ratings on articles, authors, and outlets. And we would license those out to social media, search engines, news aggregators, advertisers. So it was this kind of media credibility, data, ad tech business. And, the whole point of it was I was trying to kind of right the wrong incentives in online media that drive clickbait as opposed to writing trustworthy content that builds audience. I was trying to create a measurable metric, a unit of account, if you will, in that space so that authors, publishers could look at it and say, okay, we got 3,000 views on that clickbaity piece, but we can visibly measure the drop in credibility from our audience score here. So I was trying to create that metric, very difficult business, banged my head on a wall for about a decade, trying to make it work. It was working just enough to stay in business, but it was a very hard business. But all the while, I was honestly distracted by Bitcoin. Like, the time I should have been spending more on Credder, I was learning about Bitcoin. I was like finding myself just totally distracted and trying to spend my intellectual energy and curiosity on all things Bitcoin. And so when I decided, okay, that's enough. A decade is enough. Let's wrap up this chapter. Let's find a buyer for this business. I reached out to the folks at Early Riders and Onramp. I've been a big fan of The Last Trade since it started, I think, a couple of years ago. I find that to be a very high signal show. And so I reached out to those guys and basically said, hey, you've got your hands in a lot of Bitcoin only pots. I really like the different business lines and opportunities that you guys are going after. I'm about to basically free myself up as a capable entrepreneur operator that really wants to be working on Bitcoin infrastructure in a Bitcoin only world. Let me know if there's anything. I'm sure you get hit up all the time, but let me know if anything comes across your desk that you think I might be a fit for. And then Michael Tanguma, the CEO of Onramp, hit me back within hours and said, hey, we're looking for a CEO to run Acropolis. It's this company that, and now I'll share what Acropolis does, is we're basically a Bitcoin Treasury advisory firm and custody solution. So the idea is to simplify and scale corporate Bitcoin Treasury adoption worldwide. So we do that with this kind of comprehensive 0-to-1 solution that starts with custody, accumulation strategy, investor relations, comms, tax, and accounting. And so we bring companies through this repeatable process of onboarding them into Bitcoin in the right way, in a corporate-friendly way. And there's a lot of nuances between an individual versus a corporate entity moving into Bitcoin. So when he told me about that business, I was like, oh, wow, I've been doing a Bitcoin Treasury since 2018 for my restaurant. This is perfect. So there was just a magical fit there. I've been in the CEO position since November. So I think we're coming up on about 6 months here. It's been a really crazy, fast-moving 6 months. If anybody's been tracking Acropolis's growth, it's been a wild ride, and honestly, a very big difference between the slow grind of the last decade, trying to make a business work that just wasn't quite having product market fit, to what we're doing at Acropolis, where people are knocking down our door right now, and the space just seems like it's primed to 10x over the next 12 months.
So what are you seeing there? Like many people talk about gradually, then suddenly. Is that something that you're seeing as well? Like what kind of companies are hitting you up? I can imagine that is private and public companies. Like what type of companies are looking into this?
Yeah, if it's gradually, comma, then suddenly, I think we're like at the comma or like the TH in then. Like we're past the gradually, but we're not quite at the suddenly, because obviously when the suddenly happens, it's going to look like a candle straight up. We're going to know it. But we are really approaching the suddenly moment. As far as what we're seeing, there's a million different directions we can go down this, but Acropolis is working with private companies and public companies. Most of the companies we work with are not crypto native Bitcoin type companies. They're traditional businesses where the CFO or the CEO or the founding team is orange-pilled themselves, has Bitcoin as a personal investment, and has gotten really comfortable with Bitcoin's volatility and says, hey, I love Bitcoin. I want my company to hold Bitcoin, but I know that there's a lot of different considerations to take into account when a corporate entity is moving into this direction. And so that's the role we play. Custody is a really big part of this. I know you have the broadcast with the Onramp guys, and Onramp is a sponsor. So I know you know about multi-institution custody, but custody is a really big conversation that we have because you can't realistically expect a corporation to have a multi-sig where they give one key to the CFO, one to the CEO, one to, the head of compliance or something like that. No employee wants to be holding the private key for the company that they work at's balance sheet. That's just like taking personal risk when it makes no sense. It's also, there's a lot of issues with continuity plans. It's just not a very corporate compliant feasible way for a business entity to be holding a large amount of Bitcoin on their balance sheet. And shareholders of the company honestly shouldn't accept that type of custody, where two of the three team members could theoretically run off with the keys and the company's assets. But at the same time, a company really shouldn't be parking a decentralized digital bearer asset with a single custodian, whether that's Coinbase, Fidelity, Anchorage. You're taking an asset that does not need to be held by a single counterparty, and you're parking it all with a single counterparty, which introduces a single point of failure. If something were to happen to that entity, you might lose access to your Bitcoin, you might become an unsecured creditor, it might just disappear if that entity is not handling it properly. You might lose access to it for some reason. There could be a 6102 attack, from the US government, for example, or a honeypot type attack from a foreign entity. I mean, honestly, Coinbase looks like a pretty juicy honeypot as these other foreign nations are starting to realize that they should have a Bitcoin reserve, but that they're getting into the game a little too late. So we know corporate espionage is a very real thing, and it's definitely already present in the Bitcoin community. So what we do is we offer this middle ground between holding your own multi-sig private keys as a corporate to parking it all with a single entity. We offer multi-institution custody, which is the best of both worlds, where a company has a legally distinct agreement, relationship with three different institutional grade custodians, where each of those custodians serves as essentially a guardian of a single key. So none of them have unilateral control over the Bitcoin. The company doesn't have to hold private key cryptographic material themselves, and they have more of a traditional banking relationship with each of the three entities. And when they want to move the Bitcoin out of deep cold storage, which shouldn't be often if there are clients, because we're really treating the Bitcoin as, put it away, the money that you're not going to touch for the next 4 to 5 years, you simply do a video verification, whoever the authorized representatives at the company are. You do a video verification with two of the three entities, and now you can move the Bitcoin. So this is the unlock that we believe is going to scale corporate adoption of Bitcoin. And I know some people have a bad taste in their mouth about corporates and nation states acquiring Bitcoin, or BlackRock, but Bitcoin is for your enemies. Bitcoin is just better money. Bitcoin, it's like getting mad at somebody for using electricity or fire. It exists. It's for everyone. It is permissionless. You should expect any self-serving entity to buy and hold Bitcoin.
I don't want to stray away, but I think that's always interesting when people are like, yeah, but BlackRock this and that. Like, I also want more general people like us to figure this out. I mean, hence this podcast, right? But you cannot stop anyone from adopting it. So if you don't like that, BlackRock has an ETF, or there are certain types of companies or countries that are buying Bitcoin, you should write a book, start a podcast, write on X, Facebook, wherever you want to write about Bitcoin, because that's just a slow grind, I think.
And to be fair, it's BlackRock's customers, right, that own the Bitcoin. And the same thing, like with MicroStrategy, now Strategy, you can say that it's all Saylor's Bitcoin, but it's not. It's the asset is not redeemable for shareholders, but it is an asset on the balance sheet that the shareholders own a claim to the company in. And so, when these companies are acquiring Bitcoin, you should really think about it as shareholders, individuals somewhere, like every company, every entity, whether it's a family office, an investment fund, whatever it is, like there's an individual at the very bottom of that. So it's still individuals acquiring Bitcoin or Bitcoin exposure.
Yeah. So when you are working with these companies, their journey of integrating Bitcoin as a treasury asset, using it as their personal hurdle rate, what are you seeing? Like you shared, you didn't really share like the type of companies, but do you have some examples that you could talk about? You don't have to mention the names, right? But more like what kind of companies are going for this, and then maybe also when they reach out or they are referred, what are kind of like common misconceptions about Bitcoin that you still encounter, even though you can probably pitch it in a great way to them as to why they should, and of course you have your own experience. But yeah, what's like the most common misconception that you come across there?
So I'll start with the types of companies we work with. When we first started out, we were working with a lot of private companies. We were aiming at kind of larger mid-market privates, but like at the very lowest of the lowest in size, we have bakery chains, type of restaurant franchise type businesses, getting up to oil and gas funds, investment funds, technology, SaaS type companies, or commodity rich type industry businesses. And then now what we're seeing is a overwhelming amount of publicly listed companies coming to Acropolis. That's not a brag. That has everything to do with Onramp's multi-institution custody solution that I mentioned, because the bigger your stack gets, the more custody becomes the priority. And the more you look around at those custody solutions, like I mentioned, for strategy, do you think Saylor wants to hold 100% of his coins at some other business that he's about to be worth more than, custodying his Bitcoin? It just doesn't make sense, the current solutions being offered to corporates. And so, especially for listed companies that need to take extra caution to guard shareholder wealth and value, especially if they're publicly going in this Bitcoin treasury direction, they do not want to get kidnapped. They do not want to take single counterparty risk. And so we're getting a lot of inbound interest from public companies, especially outside the US, who seem to have even more lax regulation and can move a lot faster. So just like a founder of a startup can move faster than a publicly listed company, a listed company outside of the US or the EU can move a little bit more quickly as well. So we're seeing a real big uptick in pubco interest, also a big uptick in companies that are going public in general to execute the Bitcoin treasury strategy and access capital markets. So, there might have been 10 publicly listed Bitcoin treasury companies or companies with a Bitcoin treasury 8 months ago, but like these guys are popping up there. I can tell you there is a huge pipeline of pre-IPO companies that are coming out with their listed company strategies over the next 6 months.
So what practical steps, for people listening that have a business, what are like your top 2 or 3 tips for anyone who's considering doing this? Do you see any big challenges, or is it similar to doing it in your own personal way?
So volatility is it's very real. Most businesses are trying to rid volatility out of existence in their business. And so for a traditional company that's been around for many years, has predictable revenue, it's very hard for them to want to add something this volatile to their company, because they know they have to share earnings reports. They know it can become a distraction to team members or even key vendors and partners. It's, Bitcoin is still looked at as a shady thing in many circles. And so volatility is a big piece of what we have to address at Acropolis. We do that in two ways. One is they get access to our chief investment officer, Glenn Cameron, who does a deep financial analysis on the business to understand things like free cash flow, maintenance costs, a cushion of reserves that's necessary so that we can make an allocation that does not disrupt the business and does not make that business become a forced seller of Bitcoin in a down market. So it's really important that we help them with their position sizing. A lot of times we actually have to look over their shoulder and say, no, we understand you love Bitcoin. Trust us, we love Bitcoin too. But if you do this much, if you buy this much, you're actually starting to put the operating business in jeopardy. So sometimes we have to look over their shoulder and tell them that they're going a little too hard. Or sometimes we need to give them a little kick in the ass and say, you have some real estate here, some commercial real estate. Did you know you can get good borrowing rates against that, even better than borrowing against your Bitcoin today? You could use that to buy Bitcoin and use your free cash flow to service the debt, and you could buy more Bitcoin at today's prices. So volatility is a big piece of it, and to address that volatility, also we have an investor relations and corporate communications team within Acropolis. So we do a lot of education, employee Q&A webinars, getting the board educated. You bring us in, we're kind of the outside experts that give you that air cover as a service and help kind of preventatively or preemptively address concerns about Bitcoin as a risk asset, which again, we would say it's not a risk asset, but we need to educate folks within teams on that so that it doesn't become a distraction to the operating business during those inevitable periods of volatility.
Yeah, that's super interesting. Maybe it was because I put two questions into one, but I don't think we touched upon the misconceptions. But here it's interesting, right? You talk to employees and of course leaders of companies want to have people aligned with this strategy because people can just add Bitcoin to their stock app on their phone and then see the price go up and down and maybe get worried. So maybe to tie it back to the misconceptions, like what are you seeing there? Is that what you said, like Bitcoin is a shady thing? Like what are the top things that you are encountering there?
The top misconception is that a company needs to have a diversified portfolio of crypto. Unfortunately, we have a lot of companies that come to us. They know that they're missing out. They know that they're late to the game. They decide they want exposure, but they're thinking about crypto as this bucket, this basket of different tokens. And so there's still a lot of education that needs to be done, and we do it at Acropolis to try to educate those folks that no, Bitcoin is different. You do not need a diversified basket of crypto. What you need is Bitcoin and Bitcoin only. So that is a big misconception. I'd say maybe another misconception is that a lot of companies think that Bitcoin is a fix-all, like that if their operating business is in decline, if they're on their last leg, that they can come to Acropolis. Acropolis will magically be able to raise debt or equity capital for them despite the poor health of the operating business, and that they're going to be able to use Acropolis and our network of private capital or our brand to raise capital, buy Bitcoin, and save a dying business. And unfortunately, the truth of the matter is that a lot of companies have waited too long. They're too late. And you do still need to have a healthy operating business to really pursue a Bitcoin treasury strategy.
And so how do you envision this evolving? What does the future of Bitcoin in corporate finance look like in, let's say, the next 5 to 10 years? I think you look at it the same, right? With the kind of like the 10, or now it's like an 8-year time frame, in 2033, 34, early 34. 99% of all Bitcoin will be mined. The last 1% over the 107 years after. How are you going? How are you seeing that evolve? And then maybe to tie back to the suddenly part, when do you see the suddenly part happening?
So we're doing everything we can to get our clients prepared for the suddenly. But honestly, if you come to work at Acropolis, you probably are already feeling the FOMO to some degree because you've decided to take action. So we don't have to convince most of our clients that the future is bright and that it's quickly approaching. What do I see in the future? Well, it says it right there at acropolistreasury.com at the top of the website. Every business will hold Bitcoin. The way I see it is Bitcoin is money. To say in the future that a company is a Bitcoin treasury company is just going to be like saying a company is a money company. It won't even make sense to people because, like, yeah, of course you're a money company. A company's purpose is to make money and drive value for shareholders. It's going to become unnecessary. I also think that the marketing push that a lot of these Bitcoin treasury companies get from announcing their treasury strategy is already starting to wear off. So you're either going to have a really unique strategy or a really good business or a really big buy target to really drive up attention and awareness in a way that still gets you some bang for your buck. And that's fine because honestly, you shouldn't be buying Bitcoin for your corporate treasury because it's going to help you sell more hot dogs. You should be doing it to protect the capital that has been hard fought and earned over the life of the business. As for the suddenly moment, not financial advice, but I really hope your bags are packed because the way that we're seeing the ramp up in this space and the decline of Bitcoin available on OTC desks and companies whose entire strategy is to basically arbitrage the fiat world and to make Bitcoin acquisitions and to have stated policies of never selling. I really think that Bitcoin is becoming more and more scarce. And the supply shock is imminent. I think, if you had to ask me to put a price target on it, I think we're in the 300K range in the next 18 to 24 months.
I heard that on OTC desks, it's actually already pretty hard to do big buys that are like a 1,000 BTC plus, which still, of course, is, a lot of money. It also doesn't sound like a lot. I mean, we saw Figma, who has 70 million in IBIT, right? Okay, that's an ETF, but if you want to buy 10 million plus worth of Bitcoin, Bitcoin, you're going to have struggles. So, what have you heard anything about that?
No, there's still a lot of liquidity out there because unfortunately a lot of folks who own Bitcoin are still willing to sell when the price is right. If you ask me, you never sell your Bitcoin, you borrow against it. You do whatever you have to sell to hold on to your Bitcoin, but there are still a lot of folks who are willing to sell when the price is right. And so as price rises, the truth is supply will meet that demand. So, we like to think that, supply is gone forever. And to some degree, there are entities like Strategy where supply is never coming back online. But there are a lot of Bitcoin. The vast majority of Bitcoin is still held by individuals who have, husbands or wives and want a bigger house, want a better vacation next year. They have things, dreams, ambitions. And when the price is right and they can see, at the click of a button, they can transform their lives, a lot of them will still choose to do so. So supply will come on the market. And then what we see, we work with BitGo as our deep liquidity provider for our execution desk. And we can make buys of $50 million without moving the Bitcoin price a single cent. So we're still at the point where you can make large lump sum buys without moving the price.
Interesting. All right. I have 3 short questions to wrap up. What advice would you give to our generational peers when it comes to studying Bitcoin, adopting Bitcoin? I mean, hearing your journey, I think it shows that Bitcoin has really improved your life. Yeah, what would be your advice to our generational peers?
I think our generation, if it weren't for Bitcoin, would be looking at a really dire strait. But we are also the generation that is tech savvy enough, has the risk tolerance enough, the long enough time horizon where we might actually be the ones to benefit the most from an emerging store of value asset like Bitcoin. So to me, it's like it is absolutely urgent that you don't just stick your head in the sand and give up on yourself, and that you at least start down the path of trying to learn about money, because that will ultimately lead you to Bitcoin. So you don't have to start by learning about Bitcoin, but you do need to take some time to learn about money, to learn about store value assets and the properties that make them unique and how to build generational wealth. You can't just give up and say, oh, I'm going to work Uber and Lyft and DoorDash forever. I'm never going to buy a home. I would just urge you not to give up on yourself.
So when it comes to Bitcoin, do you think you have a like spiky point of view that not many people share with you? Like, is there anything where you really think like, okay, I'm a contrarian there?
That's a good one. Like, where do I break from traditional Bitcoin maxis, I guess? I guess where I break is I have a very healthy appetite for Bitcoin equities. I think equities, corporate securities are still a very valuable investment, and that to some degree, a company's stock like Strategy will outperform Bitcoin, and that it's okay, if not somewhat logical, to have a significant position in some of these Bitcoin treasury companies if you understand the business, if you understand the strategy, and you feel comfortable with the executive team's ability to execute. Granted, I would always say have your cold storage Bitcoin first, but I think it's absolutely logical and appropriate to want to participate in the arbitrage that these companies are doing, because I can't borrow money at 0% and buy Bitcoin, but Saylor can. And I can do that alongside him as a shareholder. And so if you don't think there's value in borrowing money at 0% to buy Bitcoin, I'm sorry, we disagree. I think that Bitcoin equities are here to stay and going to make people a lot of money, even if they relate to Bitcoin and they have kind of unit of account bias and they're like, I can't buy Bitcoin at 109,000. Well, it starts to look good to buy Strategy at $380 or something. And so I think that there's going to be a lot of folks who actually missed cold storage Bitcoin come in and buy Bitcoin treasury companies because it's like a GameStop type hype. And honestly, some of these folks who came late might actually end up building a bigger net worth than some of the cold storage Bitcoiners over the long term. But again, I would urge you to get your cold storage settled first.
All right. That was spicy. Nice. All right. Last question to wrap up. And I ask everyone the same question, which is, what is a core belief that you will never let go of?
Oh, shoot, I'll have to say two, just because I'm not going to be able to pick one. One is lead by example. So personally, I just don't think that anything gets done in the world by telling somebody to do something. I think you look at the world and you see examples of people living a certain way, by a certain code, doing a certain thing, and that then you emulate. I think that's how human psychology works. So for me, lead by example. If you want people to do a certain thing, you have to be the one doing it, and you have to be an evangelist of that behavior, and you have to be committed. And then the second is kind of a business type tagline that I live by. So that first one is kind of all things, but for the business tagline, it's vision without execution is hallucination. I think a lot of people think that ideas are worth something. They're not. I'm sure a lot of people thought of Uber before Travis Kalanick built Uber, and a million other companies of the sort. So if you have an idea, that's really just the starting point. It's worth nothing. You have to commit to it. You have to build on it for maybe even a decade to pull the value out of it. But if you do so, you can become an absolute legend and build life-changing wealth. And so vision without execution is hallucination, and lead by example.
Awesome, man. Well, I know you have to go. Thanks so much for your time. Thanks so much for this conversation. Really enjoyed it, and we'll stay in touch. Thanks, man.
Thank you so much, Bram.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for a next episode. Bye.